Let me welcome on board Gaurav Pandey, the MD and CEO at Godrej Properties, joining in on the show. And Gaurav, have to talk about FY24. All of it has been such a stellar year for you guys. Robust sales, consumer demand, all of it has been, extremely at an all-time high. But where do you see the demand trend going forward for your key markets like MMR, NCR? Tell us about the traction that you are witnessing on ground. And do you believe that there are further legs to this rally?
Thanks firstly for having me here. I think this has been an extraordinary year for Godrej Properties, specifically on Mumbai market. Q4 has broken all sorts of records for us, and including real estate market in Mumbai. We did about 4,000 plus crores of sales in Mumbai metropolitan region, which till date is going to be the highest booking value done by any residential real estate developer in India market. We also happened to do a fantastic launch, the name of Godrej Reserve in Kandivali, which is now the highest selling project of Mumbai real estate again ever. So something 700 odd crores, 2690 to be very specific. In North again, we had a fantastic year. This is the first time we've done 10,000 crores of sales in that market, and it's again backed by a very holistic quarter-on-quarter kind of a performance for North India business for us. And in quarter specifically, we had a project by the name of Godrej Zenith, which is the highest selling project for Godrej Properties ever. So this is like a 3,000 crore kind of a sort of launch we saw, and at a fantastic price, at the fantastic quality of sale as well. So yeah, overall, 22,500 crores of overall sales, backed by some amazing finishing sixes that our team could hit in Q4.
Now bookings have been more than doubled on a quarter basis. Some stellar numbers coming in. So what are you guiding on this front, provided that you've already expected guidance for FY24 by about 50-60%?
Say normally Q4 for us has always been the best quarter, because finally the numbers move through launches, and launches a combination of, as an algorithm, it's a combination of the kind of land deals you're able to buy, and basis that the inventory that you are able to generate, and approvals on timelines, right? I think to the extent this happens, booking value is more of an outcome. Usually that's been the trend. Q4 happens to be the best, but won't fair for me to kind of give you any view on Q1 or thereabout. But yes, I think directionally, if you see from an annual point of view, we would like to have a good rate of growth. May give guidance which is more something we are sort of certain on, but aspiration is always to try our best to lap into any opportunity the market is currently presenting us.
Right, and talk to us about project mix and what are the plans down the line?
See, fortunately for us, we had done some amazing amount of business development deals. Again, a different record in itself, and this is throwing us launches every practical geography. We would give a sort of a long calendar in our investor presentation, which will come next month, but still to be sort of an indication. North will have continued back-to-back launches. We'll have something in Noida very coming soon, Sector 146. We had bought 2 very prime land parcels in Gold Coast Road, Gurgaon, which will hit the calendar in the year, and we also have something very exciting in Dwarka Expressway belt as well. So I think we have a good pipeline there. We have a similar exciting pipeline in Mumbai. In fact, the project that I was talking about is just a fraction of the total projects. We'll have more and more launches happening over there, and then we have an exciting plan both in Pune market, and if you see, we've done major acquisition Hyderabad market and Bangalore last year, which will start hitting the launches this year. So yeah, overall, fairly well diversified, very high action pack kind of a calendar is available. But yes, we have to see how quickly can we bring to what specific quarter these launches. That's something effort has to get into, but I'm reasonably confident that the deals allow us to continue ripen the fruits that our team are very focused on.
Right. Also, this is your best ever sales quarter for a third quarter now in a row. What's the outlook then for pre-sales figure, say, for FY25?
I think pre-sales will see momentum, right? I mean, because we have great launch calendar ahead of us, and I do feel that our South business will also pick up significantly because the great BD we've done, especially in that market of Hyderabad and core market of Bangalore. But specific booking value guidance, like I said sometime back, we will mention hopefully in the next investors and BD presentations. That rather first we'll discuss the board and then we'll share the investor presentation if we feel that's the right time. That's what we always have been doing. But yes, fair to say that we have fantastic launch calendar ahead, and that gives a very good sense that we will have good continued growth ahead.
For the new projects launched in FY23, projects Mumbai, NCR, Pune, Bangalore, and the second phase launches both in NCR have been delayed. What is causing the delay?
See, without getting into specific on how much got delayed and why, I think if you see typically in this business, you have controllables and you have non-controllables. Now, controllable part of value chain is which markets do you want to focus, what's going to be a capital strategy, what's going to be your ability to design a product basis, consumer thesis, consumer research, right? I think these are controllables, but the unfortunate part of this business is that you have to get into approval process, which is dependent on government, right? And the different parts of the year and different departments and jurisdictions will have different pace. Frankly, it's sometimes very frustrating that you are trying your best to get an approval, it takes time, but I think that's the nature of this business. You have to take it with a pinch of salt from an approval process. But what we've been able to do for us at a larger thesis, that we've been able to become more and more efficient in terms of design process, ensuring we can save as much time we can do on the controllable bucket, and then try and hope that being diligent and follow up with the relevant department, you get approval. So sometimes you get certain approvals, sometimes certain approvals don't happen, but then you still don't want to give up. So if you see last financial year, while some launches have moved on, some of the launches may happen even Q1 as we speak, but we still managed to pull off because some approvals did come before we expected those could come, right? So it's a combination of expectations that we have and some business estimates we sort of build. They also have a sort of a contingency plan. Sometimes you are lucky you get everything right, and sometimes even if you hit a particular percentage ratio, your contingency kind of makes up more than for it, which happened in Q4.
Okay, and what about your revenues? Because they have risen quite substantially. So how many of your projects have hit the revenue recognition stage?
Yeah, if people who can understand how the valuation works in the sector, as you rightly said, is a combination of how OCs kind of come in, and that's when your profit gets recognized. But a challenge for the sector is that there is some amount of lag which happens. So if let's say I've sold 9,500 crores in Q4, if let's say some projects are very early stage in that revenue recognition will happen say 3 years from today. But let's say there is some sales that have been in a plotted development which is OCS already coming up, then of course the revenue recognition happens accordingly. It's a sort of a dilemma that any developer goes through. How we tend to see directionally internally is that we see what's the kind of PAT margins we are locking in our sales, what's the kind of margin expansion we are able to achieve, what's the kind of collection run rate we are able to hit, and how is this directionally sales, and more important than sales alone is the quality of sales. The quality of sales, what's the kind of payment plan and the brokerage M&B cost we do. So I think with some reasonable amount of confidence, I'll say we'll probably be the best in class in this industry, and that's some of these indicators. When you build into a model, you can sort of make an estimation of forward-looking revenue recognition, which we do, and so does various analyst reports do indicate. Yeah.
Okay, let's talk about your commercial portfolio as well, because you've stated that 4 out of the 5 balanced projects are going to be completed in FY25. Is that on track? And what's the top line visibility that you're getting from these from your commercial portfolio?
See, essentially, commercial real estate is a sort of investment in, as you know, in Godrej Fund Management, some of these assets, which is hitting it. And I would simply, at the moment, without telling you specific per se, we've anyways indicated the total revenue potential that is emanating from them in a life cycle of it. But I think as and when these will get into occupancy certificates, we would be able to list them fully and get revenue in ourselves. Place where we are sitting right now, just 30, 40, 50 meters from here is the Taj Hotel, which is also property owned by us. As part of it, it's doing far better than we were expecting. We are also struggling to get our leadership team get the rooms over there. So sometimes that's very heartening to see. We want to do a conclave, we had to book almost a month in advance. So I think commercial is going to do very well in the long run, and at least are seeing some early indications of that. But frankly speaking, our portfolio is more balanced, more residential to be very candid, and this is more of the kicker that the business will be able to enjoy as these are hitting the rent income cycle very soon.
All right, thanks very much for giving us that heads up. That's the view coming in from the management of Godrej Properties in terms of their bookings as well as the estimated revenue potential.
If you like this video, then like, share and subscribe to ET Now.